Welcome investors! Today we'll talk about the way how I research for the stocks. This video was inspired by the question made by the user Kerbal Space. He asked me how I do the research for the stocks. So I came with the 5 points how I do this. Point number 1. I don't actively research for the stocks. I look for extraordinary events. Point number 2. When I find the stock, I don't do fundamental or technical or quantum analysis. Point number 3. Stocks and companies, because behind the stocks you have companies are changing. Sometimes you have good management, and then after a couple years this good management becomes bad management. Point number 4. Buy companies which are in industries which are going to survive for many years. And point number 5. Be ready to make mistakes. If you're interested, keep watching. I don't actively research and look for the stocks. What I do, instead of this, I'm waiting for extraordinary events to happen around the world. For example, subprime mortgage crisis. That was extraordinary events. Another extraordinary event was virus situation in March, which caused stocks entire market to go down for 2 weeks. That are the times when I start looking and I decide to buy some stocks. I give you example because this works the best for me. I just don't want to talk without showing you this in real action. March 2020, all stocks went down. Health crisis around the world. Which companies were the most affected? Do you remember? It was, of course, cruising companies, and it was airlines. What I did, I took a closer look at the cruising companies, big companies, Carnival. And I did not plan to buy at all Carnival in the past. Personally, I don't even like going for the cruises. I've never been on the cruise because I just don't like idea of being with thousands of people on the boat stacked for 2 or 3 weeks. It's just not my type of getting rest and spending vacations. But apparently people like it. So what I did, I looked into the cruising industry. I identified the leader, which is a Carnival, and I saw that stock usually was selling for $40, and in March it was around $10. So I started buying, and I decided to buy as long as the stock is really low. So I was buying Carnival in March, April, and in May, and the total cost which I invested is around $8,900. As of right now, market value of my shares of Carnival are $14,600. So the capital gain is around $5,600. So return is 64%. And my return in capital gains from this move. So that's the way how I approach the market. I'm not actively participating in looking and scanning the market. I just wait for extraordinary events to happen. Point number 2, when I decided to buy the stock, I don't do technical or fundamental analysis, or I don't use any of those websites where you just punch the numbers and then you have a prepared list of the companies which are basically doing the numbers which you put on or basically align with the numbers which you put on. Instead of this, I'm reading the articles about the companies. Why I don't do fundamental or technical analysis or quantum analysis? Because I don't know how to do this. I'm not gifted with numbers. I'm not good at math. But I know that I am very good at psychological aspect of investing. So what I do, I'm trying to gather as much knowledge as possible from articles about the companies. If I see that company has excessive debt, I'm trying to avoid these companies because that doesn't show that management is really good for this company. Point number 3, companies are changing. 1 year, company can do really well, and then another couple years, management can change, CEO can change, CFO can change, and the company can basically start doing really poorly. So this is good side and the bad side. Because good side of this is that you can buy the company which you think that is going to do really well in the future, and everybody else is looking at this company and they just avoid this company because based on fundamental technical analysis and making assumption from the numbers, they just avoid this company. But you might see the future, bright future for this company. So that's the point which I also include in looking into the stocks. Point number 4, buy companies which are in industries which are going to survive for many years. Another example, Disney. Disney operates in entertainment company. When the crisis came in March, April 2020 and market came down really deeply, I look into the Disney and I scratch my head and came to the conclusion this company is going to be around for many years because it is company which entertains people. People always wanted to be entertained from the Roman Empire times all the way to now, and probably for many years in the future. What I did, I decided to buy Disney shares. So I started buying Disney on March 13, 2020. Total cost of my shares is $5,100, and as of right now, market value is $10,500 and the change. So the capital gain is $5,300. It's 103% return on investment. And I'm sure that this company will keep going for many years in the future because it is a leader in entertainment. So this is a keeper. I'm keeping this company for many years to come. And point number 5, be ready to make mistakes, to buy the companies when you will predict that they are going to go up, but instead of this, they go down. I give you, of course, example from my own portfolio, Aurora stock. when cannabis industry was going down, 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 I was thinking that they are already in the bottom. And I decided to buy some Aurora stocks. I bought them, and as of today, I'm 66% down with my shares. It is a mistake, which I'm keeping with me. I'm not selling the shares yet. It's unrealized loss. At the same time, I bought Afira, and my shares of Afira right now, they are 70% up. So with Aurora, I'm down 66%. With Afira, I am up 70%. So overall, 4% up on cannabis industry. Of course, I have two more companies from cannabis industry. It's Canopy Growth and Organigram Holdings. Maybe I'll do another video about them. They are both up. But what I would like to say is that be ready that you will make a mistake. What is also important, what I would like to mention, is that I'm not really upset. I'm not planning to sell these Aurora stocks because this is not money which I need. I'm keeping this company, and I'm hoping that within the next 5 years, this 66% down is going to turn into 66% up, like Afira. Afira has a great management. They didn't do unnecessary acquisitions like Aurora did. So I'm hoping that maybe management of Aurora is going to change within a couple of years. There will be much wiser management, better, and the company is going to turn around. And one more thing which I would like to mention, I would like to talk briefly about stop loss. Stop loss is generally considered that you put the number for the stock, the price for the stock. When it goes down, then your stock is automatically liquidated. I want to show you my definition of stop loss. It's a little different than conventional. What I mean by this, my stop loss is at the time when I'm buying the companies. What does it mean? I'm trying to buy as low as possible. That's why I'm waiting for those extraordinary times around the world. Because I know that if I bought, for example, Carnival for $10 and now the price per share is $21, if the company goes down again to $10 or $9, I'm not losing a lot. The same with Afira. The same with Aurora. Aurora, I'm down. But I cannot lose more than this what I already invested into this stock. So this is my protection. I'm trying to buy as low as possible during the extraordinary times. I'm not actively searching for companies. I'm not spending time every day looking for new companies. So this is really briefly, very briefly explaining how I research for the stocks. If you are really interested, I can elaborate more about those points in my future videos. So let me know about this in the comments section below. It might sound a little bit awkward for you and might not make a sense for you. You might be doing like I said, technical analysis or fundamental analysis of the stocks or quantum analysis. Keep doing this. If this is working, then keep doing this. This video is only for informational purpose. It's not to to give you any advice or impose on you my way of researching for the stocks. It works for me, and I'm really satisfied because most of the stocks which I bought, they bring me positive return and I have positive gains. Some of them, like I show you, Aurora, are under the water, and some of the stocks from oil and gas industry also are under the water. But overall, I'm up with my portfolio, so I'm planning to keep using my strategy. I'm also slowly learning about fundamental and technical analysis of the stock because I want to have open mind and I like to learn the new things. But like I said, I'm more gifted in this area, in this psychological area of investing. What I mean by this is buying when everybody else is selling. I'm very comfortable doing this. That's why, like I showed you, my Disney stocks or JP Morgan stocks are really up more than average. And the same with uranium stocks, which you probably saw my previous videos. If not, then go and take a look. Buying at the time when most of the people don't buy, being contrarian investor. This fascinates me. Thank you very much for watching this brief video. If you have any comments, you agree or disagree, write this down in the comments. Also, please remember to smash the like button. This will help me greatly to build this channel. Share this video with your friends. Subscribe to the channel. If you are not a subscriber, please subscribe and send me your questions or your comments. I really appreciate all the comments because I'm learning a lot thanks to you. Really, I'm learning a lot, and I really enjoy doing this. I know that I'm not a professional and I'm really learning a lot thanks to you, and I'm growing. So thank you very much for all your comments. I hope you stay healthy and well and have a great day.